If all the people out there who love Michael Burry because he's some sort of hero, you don't actually understand how to manage risk properly, okay? And it doesn't mean he doesn't get his trades right every so often, but you don't manage risk like he did during the great financial crisis by doubling down, doubling down, doubling down, doubling down, doubling down. Guess what his unit holders did as soon as they got their money back? They withdrew their money from him because they realized he was a shit risk manager. Yes.
Yeah.
That's what happens because he put them through torturous fucking remark to markets that a good risk manager would have closed out his trade and entered it again in the future when the timing was better.
Fair criticism.
I mean, that's the whole thing in what's it called? In the movie, in The Big Short.
The movie doesn't do justice to it. You got to read the books. You got to read the reality. The movie glorifies it a little bit. And even the movie shows how he was, running himself through a wall because he was so frustrated when he had to remark to market his portfolio every time. He was fighting against the big boys. He was fighting against insurance companies that truly thought they were buying AAA risk at 200 basis points, which is the equivalent of thinking you get 18% on Luna tokens or on US Terra. It works for a while and then it blows up, okay? But just like Luna, the subprime Ponzi continued for a long time. He identified the problem. He just didn't enter the trade properly, okay? And I have nothing against Michael Burry, except that he's giving horrible advice to a lot of people who think he actually knows how to manage risk properly, okay? He may be a good mathematician, but he ain't that good at managing risk and trading. And that's unfortunate because you need both of them.
Yeah, it doesn't matter if you can't manage your when you enter and exit a trade. You're totally fucked.
It's all, you know what? What's the old expression, Phil? I was early. You got to learn what that means.
If
you were early,
it means
you were wrong.
Yeah.
Okay.
Exactly.
How many people actually close themselves out on a trade because they're good risk managers and they were early? Well, you close yourself out when you're making a loss. And if you present your client with, I was early and I didn't close myself out, the client might look at you and say, then you don't manage risk properly. You might have been right in the long run, but your trade size was wrong. Okay? Your trade size was wrong. And this is why I'm so pound the table on Bitcoin. I don't need to be 100% in Bitcoin for my trade size to work out because of the asymmetry of the trade. And you spend your whole life looking for asymmetric trade opportunities. And Bitcoin is the best asymmetric trade opportunity I have ever seen in 35 years. That means you should be long it, not short it. And if you are short an asymmetric opportunity, you may be right for a little while, but if probabilities play out, you're wrong in the long run and you've lost all your profits from the short term and you incur a loss in the long term. Bitcoin is the most perfect asymmetric trade and investment opportunity I've ever seen. If people don't want to listen to me, I'm fine with that. I'll manage risk the way I want to. You go and manage risk the way you want to.